Good morning, everybody. Hey, welcome to this Thursday, the 18th of April. Hope you're doing well as we get ready to close out this week. Market still not giving us what we're looking for in the worry of going upward movement, still getting mixed results and mostly in the red. We'll talk about that and more when Dave joins us here in just a few minutes. Hey, before we do that, though, let's not forget that in the world we live in, there are so many things that we have no control over. You can take control of your investment portfolio by knowing how much risk you have in that portfolio versus how much risk you should have in that portfolio and making that adjustment. Give me a call, 863-382-0037 to schedule your core retirement design with that. We got Dave coming up next.
What a girl wants is a good IRA balance, don't you? Probably not improving today if that girl has too many equities in it because we're having another rough day yesterday on Wall Street. Let's find out what's going on with your finances. We got Phillip Statler on the line from Statler Financial Services in downtown Sebring. Morning, Phillip. Do your girls want a healthy IRA balance?
Hey, everybody wants a healthy IRA balance. We just got to go find one.
Yeah, exactly. And it ain't necessarily purely in equities right now. It was another, again, it was a modestly off day on Wall Street. Dow was down by 45 points yesterday. The S&P was down by 29. NASDAQ was the big loser in the bunch, 181 points. And I'm kind of figuring that's an indication the more adventurous your stock holdings get, the more you're unloading them because we're starting to get some real stinking thinking on the possibility of interest cuts again, aren't we?
Yeah, we are. It's I think wasn't it the Powell came out basically and said, I think interest rates are off the table this year.
It's got pretty much what Powell was saying without actually saying it in so many words is saying inflation is becoming much harder to tame, and that means our interest rate strategy is going to be much slower than it was expected to be, which kind of means you can take that interest rate cut and throw it in the commode, and that ended up resulting in one of the indexes that I tend to watch, the Fear and Greed Index, to move from greed a week ago to neutral to the end of the week to now it's solidly in the fear range. I mean, the market is almost starting to turn bearish, although I'm still kind of thinking we're more asset reallocation in the face of an interest rate strategy change more than a bearish tendency, wouldn't you?
Well, it depends on who you listen to. I am seeing some headlines come across, not in heavy mode, but a few here and there that are thinking that we could head into some 2020 bear market like we saw back then, maybe short-lived, but maybe more than a correction from that standpoint.
Oh, I don't even like the word correction down the line. I was saying, yesterday morning, I was saying, oh my God, the Dow is down 2,000 points from its high. That's got to be terrible. I mean, that's way under the 10% number that we use for a correction number. And imagine when we're bumping off a 39,000 point peak, a bear market would mean, good heavens, like 8,000 points off the Dow. That starts getting toward the absolute numbers that make people want to jump out of windows.
Well, I mean, as far as numbers, but you got to look at percentages, right? I mean, we've had a nice run, and so those numbers are you got to convert them to percentages because they can go up that same percentage as much as they can go down.
Absolutely. I've been kind of postulating for a long time that when we start getting into these stratospheric numbers, though, there's a psychological urge to leave us with kind of multiple corrections instead of an absolute bear market, just on the grounds that, like I said, you start looking at the absolute number of an 8,000 point drop in the Dow, or now we'd be looking at a full 1,000 point drop in the S&P, actually more than that, about 1,500. To get to bear market territory. That's so psychologically devastating only that I still think, to get to a real bear market, it takes something almost catastrophic like the pandemic in order to accomplish that kind of a number.
Yeah, it's one of those things, right?
I know, I'm going out in la-la land now. What else could I say? Looking at the economic data dump for this morning, Thursday morning is our usual day for initial jobless claims, first-time jobless claims. No big surprises. They were expecting 211 on my tip sheet. We get 212,000 first-time jobless claims. The employment market is still hot compared to what it would normally be in a normal sifting and winnowing process. Philadelphia Fed put out their business outlook index. They were expecting it to be 0. That's a decline from what they had last month. Instead, it turned the corner and came into the highest number they've had in 2 years. Offhand, the business climate isn't doing too terribly badly. That's for sure, right?
Well, that's right. We are seeing that. I'm sorry, Dave.
You're changing mics on me there.
I'm trying to. I'm having some technical issues.
Yeah, we got a little bit of an echo behind you there. Give you a chance to change plugs while I do this. Yeah, yesterday the S&P ended up finishing yesterday in the red for the 4th day in a row. It's its first 4-day losing streak since back in January. So we're at 90 days before we've seen it this hourly. But again, for the sake of perspective, remember it's only 90 days, so it's not like we've never seen it before. But things are looking hourly, and with a little bit of green this morning, it looks an awful lot this morning like it did yesterday, and it may very well depend upon what the reports look like. And we're getting one company that's not a household word, but at the very least is involved in a very bellwether level industry, and that's D.R. Horton, a big home builder. How did they end up doing this morning, Phillip?
Well, Dave, I'm having really technical difficulties today, so it's one of those days. It's one of those days.
I'll tell you what. Why don't we put off the Horton report until tomorrow, and I'll give you the futures. Fair enough?
Fair enough, buddy.
Sounds like it. Telephones and high tech are absolutely wonderful, but sometimes they just don't like to cooperate. 45 minutes before the market opens up this morning, the Dow is pointed up. I mean, like I said, we got green ink and a modest amount of it. Dow pointed up 91 points. The Standard & Poor's is up by 11 1/4. NASDAQ pointing up by 42. Again, green ink 45 minutes before we open. Got to remember, though, it was green ink to about that level yesterday morning at this time as well. Gold is still going gangbusters. It's up $8.60 an ounce to $23.97 an ounce this morning, 45 minutes before the equity market opens up. Silver is still on a roll, too. It's up to $28.58 an ounce, up 0.6% from the overnight close. And crude oil is continuing to drop. Evidently, the optimism over the fact that Saudi Arabia is actually helping Israel in its war with Iran is giving us some confidence that the oil supplies will continue flowing. $82.36 an ounce right now this morning. The overseas markets, Asian Rim market was profoundly mixed. There was absolutely no trend whatsoever. One Chinese mainland market was up. The other one was down at 6 a.m. Overall, the Asian Rim market up, maybe by 0.25% on balance. European markets are looking at our results from yesterday, and they're not really optimistic about our futures. The overall index in the European community is just south of flat. Very slight amount of red ink this morning, halfway through their trading day over in the European community. If you're trying to get your IRA, your 401k, or your retirement funding of any sort in order, you want to get together with Phillip Statler. Call him for a retirement analysis at 382-0037. That's 382-0037 at Statler Financial Services. And the Statler Financial Radio Show happens 3 times a weekend on News Talk Radio, 6 a.m. and noon on Saturday, and 10 o'clock Sunday morning on News Talk 730 a.m. and 95.3 FM. We'll be back tomorrow with a look at what happened to your money today and is likely to affect it tomorrow morning here, same time on Light FM.
It's nice when you get everything on your list in one place, isn't it? Phillip Statler.
Are you still there?
I am. I apologize. My computer froze up. I was trying to switch it to my telephone so I could keep going, and I couldn't figure out how to get rid of the reverb because I couldn't close down my Zoom program. So
yeah, I was going to say I heard the clunking, and I knew you were shifting from one machine or one or one medium to another. So I figured I'd kill a couple of seconds. And by then you had Dorton ready, but it was just as bad on the second time.
Yeah.
I'll see you on Monday. Have a good camping trip. All right.
All right, buddy. Take care.
Be well, my friend. Thanks.
Right.
You will be back on Monday, right?
It'll probably be Tuesday. I think I probably got one more partner meeting.
Okay.
To kind of close out tax season. Then I think I'll be
Sounds
back
good.
on Mondays. All right, man.
Ain't no
Take
problem.
care.
I'll count on Tuesday. Bye-bye.
All right. Bye.